Hey guys, how's it going? My name is Brian, and it's probably a little bit confusing because it says that I'm YGG SEA, and then you guys see IVC up there. So I'll give you guys just a quick overview of the reason why. So my name is Brian Liu. I'm a partner at Headline Asia. We are a Web2 VC, and I started the Web3 arm about a year ago, which is IVC. One of the things that we do at our VC is we do a lot of incubation, venture building, and one of my first investments with my crypto fund was YGG. So YGG, when I invested, they had no idea who we were, and they didn't let me invest. They kept on saying, we're not gonna let you in because we've never heard of you guys, and the only way for me to get into the deal was to promise I would build YGG SEA. So because of that, I'm one of the co-founders of YGG SEA, and we have also built YGG Japan. Now, today we're here to talk about DAOs. So that's why I also put that I'm a core member of Sweeper DAO, which I'll explain to you guys the differences of DAOs. So we talked about Headline, we talked about IVC. Here are some of the investments that we made from Headline. Sorry, I'm self-promoting my fund right now, but this is what my team is making me do. So now, let's talk about crypto. We have made several investments. IVC has done about 169 investments in a year. We do a lot of investments in GameFi. We've invested in DAO tooling, which is Utopia Labs. That's the third one down under Finhei. And we've done a lot of DAOs themselves, YGG, YGDC, Breeder DAO. I spoke about earlier, we do a lot of venture building, and at the bottom is the venture building that we do for IVC. On the top are a couple of the venture building stuff that we did for our Web2 VC. So let's get into the topic of today. What is a DAO? A DAO stands for a decentralized autonomous organization. It's an entity that operates through a smart contract. It really has no central leadership, and it has transactions encoded on the blockchain. So throughout the presentation, I'm going to talk about different types of DAOs, how DAOs started, and where we are within just the whole DAO ecosystem right now. What most people can think of a DAO really is it's kind of like the LLC of Web3. That's what a lot of these corporations over the last year have been doing. They've been calling themselves DAOs, where they are basically corporations that are started for the Web3 community. They're transparent, autonomous, open source code, and they have built-in treasuries for easy audits. So how does a DAO operate? I'm sure you guys heard the one-inch representative earlier. They talk about if you hold DAO tokens, then you have the right to vote. He also talked about how sometimes it's very difficult to get quorums because you have DAO holders and you have DAO token holders spread out all over the world. So a DAO operates by giving out DAO tokens. You get the ability to vote. Then you decide how the organization should function by putting up, I guess you put up a lot of proposals. And from those proposals, depending on the token holders and how many tokens you hold, that means how many votes you get. And then after that, they submit it for governance, and then all that is managed through smart contracts. So in reality, a lot of this, right, all this stuff is still very new. And having quorum is one of the biggest issues with the DAO governance model. So here's the history of the DAO. If you guys don't know how DAO first started, here's a quick history lesson. So the DAO was the first DAO ever incorporated, and it started in 2016. Now back then, they raised 12.7 million ethers, which was one of the largest crowd-funded companies in the history back then. They raised $150 million at that time of what Ether was at. I think at its peak, when Ether was at $20, they were actually at about $250 million raised. So this DAO was run on smart contracts that wasn't written very well. And a month later, in June, a hacker found a loophole in the coding, and they drained $70 million from the DAO. Now, during that time, to move Ether around, you would have to put it in a separate wallet, and then you would have to wait 28 days before you can withdraw or before you can move it again. So during that time, Vitalik and the rest of the Ethereum community decided to do a hard fork, and which is what we know as Ethereum today. So what they did is they did a hard fork, and then they replaced back the Ether to everyone that was hacked. Now, it's not Ethereum's fault that this happened. It happened because of a smart contract that was built on top of Ethereum that got exploited. Now, because it was so much money at that time, the Ethereum Foundation had no choice but to do a hard fork. So basically, they replaced, I think, for every 100 DAO tokens, they received 1 Ether, which was what the cost of the private sale of Ethereum back then was. So back then, the DAOs were listed on Polynex, and they were listed on Kraken. And after that, because of the whole hacking issue, they were delisted. Then 1 year later, the SEC got involved, and they ruled that DAO tokens are now subject to the same regulatory principles that companies going through IPO have. And that is why in the US, a lot of times when we do invest into companies, they use a SAFE, which is a simple agreement for future equities, with a token warrant. Unlike a lot of the times when we invest in Asia, we use a SAFT, which is a simple agreement for future tokens. So what did we learn from the first DAO? That blockchain code is not infallible, hence we need to have security audits and constant review. And from 2016 till now, I'm sure you guys have seen tons of security companies pop up, and a lot of exchanges will require you to have audits before you can even list your tokens. And then, like I said before, SAFs or safes with future token warrants were then introduced basically to avoid registration and federal regulations. Here are some examples of popular DAOs. You guys, I'll leave that up there for a little bit longer so you guys can take pictures. Protocol DAOs, Maker, one inch should be up there. I'm sorry I didn't put you guys up there. Collector DAOs, Sweeper DAO, we're a collector DAO. I don't know if you guys heard about Pleaser DAO, but Pleaser DAO was started during the Asian American hate crimes that were happening in the US. And we had a very famous artist called People Pleaser that was very good at drawing NFTs. And Pleaser DAO was started by selling her drawings to basically raise money to go to the families that were attacked in the US by Asian American hate crimes during the COVID era. Sweeper DAO, which I'm a core member of, is basically a DAO that was created by the same people as Pleaser DAO. But what we do is we sweep the floors of all the blue chip DAOs. So we go out there, and whenever we feel like that, the floors of NFTs are dropping, we go in there and we buy them up. Social DAOs, FWB, Friends with Benefits. Ape DAO is also a social DAO. That is probably one of the most well-known DAOs out there. I'll be speaking about that later. We have guild DAOs, also I'm very familiar with because of YGG. Merit Circle, Avocado, GuildFi, those are all guild DAOs or gaming DAOs. Service DAOs. And then grant DAOs. Grant DAOs are more like investment DAOs. I don't know if you guys have heard about it, but Orange DAO is the latest one that popped up. Orange DAO was the one that was founded by an ex-Y Combinator alumni, and they raised about 80 million US to do exactly what Y Combinator is doing. So I'm going to talk about 3 different types of DAOs that we have right now. Ape DAO is, in my opinion, one of the ones that are done extremely well and is really decentralized. How Ape DAO started is you had to own a BAYC, and depending on the BAYC, the MAYC, or the dog, you would get an X amount of tokens. So when the Ape DAO started, it was already pretty much decentralized because you had to own one of those NFTs to even get the token. So owning Ape tokens allows you to become a DAO member, and then you get to vote on the proposals. There were 5 board members that were elected. Some of the more well-known ones is Yat from Animoca. That's because Animoca is one of the largest investors in Yuga Labs. And then you have Amy from FTX Ventures, and I forgot who the other 3 are. But those were just the DAO members, board members that were put on there at first. But after 6 months, DAO members have a chance to vote and then decide if they stay on, or you can propose a new candidate. So Ape DAO is one of the few ones that is extremely decentralized, and there's a lot of distribution across many different people. But not all DAOs are created equal. I don't know if you guys heard about Wonderland, but this is one really bad news that happened, I think, about 10 months ago. I think that's what happened. So one of the most popular crypto projects was Wonderland. It had $1 billion US in its treasury at its peak. Now, they were hacked. And then when they were hacked, the CEO and the rest of the team that was running this DAO, so what happened was, I think the DAO members voted to kick out the CEO. The CEO did not want to leave. In return, he drained the treasury. And then after he drained the treasury, he decided to disappear. The other thing was that also at the same time, the CFO was doxxed, and was basically, people released the news that he was a convicted felon. And so because of this, as a DAO, you're supposed to have a smart contract that if the DAO votes to take away the CEO's responsibility or kick out the CEO, he would need to leave. But in this case, this was done very, very poorly, where the CEO and the CFO was able to steal money from the DAO and then disappear. Now, this is another DAO. You guys hear about YGG. This is another type of DAO. Now, YGG, as of when it first started, they only sold 25% of their total token allocation to investors. So that means that the founders and the management team were holding 75% of all the voting rights. But they had a plan that within 5 years, they were going to distribute the rest of their tokens that they had, either by airdrop or by special functions that they were doing. And then that within 5 years, that YGG will become a fully functional DAO where majority of the tokens are out there for the scholars or for the holders of the governance token. So over here, what we have is YGG is a DAO that is introducing different phases where they are releasing the tokens and giving the voting power to their DAO members. So in the beginning, I wouldn't really call YGG as a DAO because of the fact that the management team is holding on to 75% of the tokens, but in their white paper, they have a plan on how they were going to release the tokens out to the rest of the community to make it become a full-fledged DAO. So what did we learn today? DAOs are still in their nascency. It's still very new, even though the first DAO was started in 2016. A lot of the questions we ask when we invest in DAOs are, is the DAO built on or off chain? Do the creators of the DAO have substantial influence? Is the information withheld from the community? Can DAO members meaningfully contribute ideas? How does voting work? And how are the members compensated? Thank you very much. And I'm ready for my Q&A questions.
Sure, thank you very much, Mr. Brian Liu. So there's the first question. I will read it out in Korean first and then translate. 실질적 실행권이 팀에 있는데 그것도 탈중앙이라고 볼 수 있나요? So the actual execution power is in the team, but can you see that as a decentralization?
Yeah, so that's what I was talking about. For YGG, because the team holds on to so much of the tokens, I wouldn't really call YGG as a DAO right now. But they have a plan to give out their tokens to all their token holders, making them into a real DAO where the DAO members will vote. Now you have another type of DAO, which is like Ape DAO, where that DAO is already a truly decentralized DAO because for you to even get the tokens, you have to own a Bayak, Mayak, or the dog. So with that, any decision made by the DAO has to be given up for proposal. So I'm sure you guys, if you guys follow Ape DAO, Yat has been trying to institute staking on the Ape token ever since it launched, but it didn't pass the first time around because the DAO members didn't vote for it. Just lately, it was passed, and then now Ape DAO will institute a staking mechanism, and that was voted on by all the DAO members.
Okay, so the second question. So do you think DAO should be taxed as some sort of the business entity or just as stock which are subject to capital gain and loss?
That's a good question. As a VC, we always look at this stuff. But, as of right now, the reason for DAO is because it's decentralized. So, in essence, which jurisdiction is it supposed to be in? Nobody knows. Where do you operate in? I mean, because people start DAOs because it's decentralized. And when you start adding in taxes, you have to, it has to be justified at where the entity is, which jurisdiction that entity is in. So a lot of people do Cayman Islands corporations or BVI is because there's no taxes. So DAOs, because there really is no jurisdiction where they have to fall under for taxes, it's very difficult to tax. Now, should they be subject to capital gains? Same thing. where are they located? Depending on the jurisdiction they follow, that's where the capital gains is. So people create DAOs so they don't have to pay tax, so they don't have to pay capital gains.
So we have two more questions for you. The next question is 이번 하락장에서 P2E가 침체기를 겪고 있는데 게임파이나 웹3 게임들이 다시 모멘텀을 되찾을 방법은 무엇이 있을까요? So now P2E is going through a downturn in this market. So do you think there's any way that these GameFi or Web3 games can gain back their momentum?
I knew I was going to get one of these questions. Yes, play to earn is really suffering right now. And the Axie model has proven to not work. But if you guys have seen a lot of the news articles that are coming out, people that are actually jumping in to GameFi right now, why don't I use a company that you guys all know, Come to Us. So I'm an investor in Come to Us. I'm also the first advisor and an investor in one of Come to Us's competitors in China called FunPlus. So both of them decided to come together and start Expla, the new layer 1 chain for gaming. Now, when you have people like Come to Us and FunPlus, which are proven freemium game publishers that actually are generating revenue, where Come to Us is generating, I think, 500 to 600 million. FunPlus did about 1.2 billion last year. The GameFi model is completely changing, and we don't know where it's going, but we can only speculate. Play to earn will be around, but I think it's going to be not play to earn, but more like play and earn, where you're playing for fun with the ability to earn. I hope that answers your question.
Yes, I do hope that answered your question. And the next question is, DAO tokens share similar characteristics with security or stocks, right to dividend and decision-making, governance vote. What's your take?
I agree. And, you know, DAO tokens are usually governance tokens, and those are security tokens. Now, right to dividend is where I don't agree, because right now, no governance token is giving out dividends because it's illegal. I would love to do it because that would make my life a lot easier, because as the YGG, SEA or YGG token really doesn't have much use for it. If I could dividend out my profits or my revenue to my token holders, that would be amazing. But because if I give out dividends, that would mean it's a security token, and I would be breaking the law, and the SEC would come after me. That's why right now we really don't have an answer to that question. But when I figure it out, I'll let you know. We're working on it.
Sure, let us know about that. That was the last question. Thank you very
Great,
much.
thank you.
네, 다시 한번 큰 박수 부탁드립니다.